Hello, and welcome to Wednesday Wizdom. That's the name I landed on for these. Feels fairly apt given the guest that I have on. We'll be sharing quite a lot of wisdom. I say we, it'll be my friend George, who is, anyone who's probably watching this knows you, but you are a fairly expert trader. I think I say fairly, you are an expert trader. I'm very in touch with some ICT principles that I think would be quite interesting to run through. But I guess just how are you? How's your week been? How's your trading been? Are you bullish, bearish? Tell us your story.
You're very complimentary. It's very, very nice of you, Mr. Wiz. Yeah, I'm good, thanks, mate. How are you?
I'm good. Yeah, it's been a busy week, but been a good week. Yeah, I survived. I didn't really have anything open on Friday for the liquidation, so I just bought up the ashes, got hit on stink bids, and then I seem to be on a little bit of a hot trading streak this week. So yeah, I can't really complain.
Very
How about
nice.
yourself?
Yeah, not too bad. I got stopped out on Friday, which is probably not a surprise to anybody, I would imagine. Overall, I'm still bullish though. I don't think there's a need to be bearish. I was saying this yesterday, like on the Bitcoin chart, especially, like we've not had a daily close below 100k since the 7th of May, which is reassuring, I guess.
Yeah.
But I never fails to amaze me when it price starts nuking and the panic that comes into people. But then yeah, daily close above 100k. I think we're fine.
Yeah. It's like this time last year. I remember the chaos that we were currently going through in the markets. So it was. It's like last year. What were we at last year at this time? We were like 40 or 50k, weren't we? Was it about 50k or something?
Yeah, believe so. I mean, we're coming into. I mean, it was November last year, wasn't it?
Yeah, when it went full nutcase.
That was the start of the bull run for me, I think, in my opinion.
Yeah. Life peaked in November. That run was so good.
And everything that everybody made up until December was gone by January.
Honestly, it was just like you opened your portfolio and every day it was a digit bigger. It was pretty nuts.
Yeah.
But yeah, I'm happy to jump straight in if you are. I think everyone here is dying for a lesson in ICT. I know I am. I know you've obviously dropped some of your little anal pellets, as you call them. I think it'll be really interesting to sort of start off, I guess, from a beginner point of view, talk through some of the concepts, and then we can flash up some charts and see what they look like on a chart, and then we can talk about how you trade them.
Yeah, for sure. What do you trade any ICT, or do you know of any ICT stuff, or? You just do you just trade your own way? Or have you ever watched any of ICT's videos? Oh, he's letting me go for it. I'll roll with it, unless he sounds good again. So yeah, ICT, right? Can you hear me, Wiz? I don't think he can hear me. He can't hear me. He's messaged me. Headphones gone. Right. Okay. I'll roll with it. Yeah. So ICT, I'm not really like a gospel ICT trader. Like it's not my main thing. But I find that ICT concepts help me build on what I already know. And give me a bit of understanding. When you can hear me, Wiz, please say something so I can.
Yeah, I can hear you. Yeah,
okay.
I'm going through some technical difficulties, but yeah, I can hear you now.
I was just asking if what you know about ICT, and if it's anything that you trade or you know of, or you've ever watched any of the videos.
Yeah, so I I know around obviously the concept of things like fair value gaps, of that sort of move towards price imbalances and relative equal highs, relative equal lows. I think I think I trade a lot of the concepts without knowing exactly the name of them. I think just sort of the way we come in. So it'll be quite interesting to hear sort of them bring to light, and I think it'll bring back. I'm aware of a lot of what it is. I think it's just sort of seeing it in action, because I think I do it, but I don't know exactly that I do it.
Yeah, I think that's the same for a lot of people. There's long-standing arguments about whether he invented order blocks and fair value gaps, or whether those things were around before he was, and all this stuff. And I don't really care about any of that. I know people say it's a cult thing, and like it's cool to be on Twitter trading ICT concepts. Again, I don't care about any of that. I just figure out how can these concepts help me better understand what it is I'm already doing. And for me, it comes from like there's two main things. It's all about liquidity concepts, which are like fair value gaps, order blocks, stuff like that, and market structure. The other kind of thing that it gives about is time. And yes, that's relevant to some of the stuff that I do, but I probably won't go into the time side of things today. But the overarching thing is that it's all about how institutional money works and how their order flow works. And the idea behind trading ICT ideas is that it allows you to trade in using the footprints that institutional money leaves on the chart, which are your fair value gaps. When you've got a big, for example, if you're a company in America and your currency is the US dollar, and you're about to do business in Asia, so Japan, for example, like might be IBM or something like that. If you need to then convert, if you then basically need to give Japan, let's say, $3 billion worth of Japanese yen to do that business, you're not going to go to an exchange and just buy UG on the market. Like you're not, because the liquidity isn't going to be there to fill that kind of, well, it might be, but the liquidity is not going to be there to fill that order. And also, if you're spending that much money to buy some Japanese yen, you ain't going to be wanting to pay for it at market value because you're going to want it cheaper. So the whole idea is that there is this algorithm at work in the market. No one knows what it looks like. People just know that it's there. And what that algorithm does is it delivers price effectively to fill those orders. So, for example, if you needed to do that, you needed to buy Japanese yen, you're going to need the liquidity to fill such a big order. So the algorithm, allegedly, the algorithm is there to to deliver price lower and lower and lower until you're hitting a pool of liquidity where buy stops are. And that's where the institutional money gets their order filled, which is where you talked about, you mentioned relative equal highs, relative equal lows. That's because you've got a pattern forming in the market that would suggest that there's some kind of support or resistance there. But we all know that doesn't last for very long. And you can, once you understand, and hopefully we'll see some examples today, when you understand how those areas are targeted by institutional money or the algorithm to fill the value for institutional money, you can start to see it in the chart. And yeah, so that it's just, that's kind of like the underlying basis of it all. So I'm happy to share a couple of ICT concepts that I use. I think we might be able to find some recent ones on the charts as well. So I've got my chart up. See if I can share. Have I shared it? I think I have. So I've just thrown a couple of basic tickers in here because chances are we'll find something on pretty much every chart. The whole stuff about ICT as well, it works on every single chart. Whether it's crypto, Forex, indices, gold, it works through and through. So, so I think here is an example of where we can see. Now, this is a 5-minute chart. Now, this is the Nasdaq on. I think this was Friday. Yeah, Friday. 5-minute chart Nasdaq on Friday. So, what can we see here? If I was looking at this, I mean, I was looking at this, and I had it mapped out, but I didn't trade this on Friday. But when we talk about buy side liquidity and sell side liquidity, you can see here you've got high. So what's resting above here? Sell stops. You've then got another high, which has sell stops above it. Now, why am I looking at these two highs? Well, the reason for that is because these highs are equal. The price doesn't exactly come up to the same, but this looks very smooth to me. This all looks very smooth, nice and rounded highs again, which you've got some more liquidity there, and another nice smooth high there. And if you go back to the left, you'll probably see that it's also relatively equal to this high here from Thursday. So the best way that I can kind of describe this to new people that are looking at these concepts is this is what people would view as resistance. This is your stereotypical resistance. What lies above resistance? Sell stops. So, which in other words is liquidity. Now, the idea behind ICT is the fact that retail concepts don't always work. They work for a certain amount of time, and that is done to lure in retail traders and sell stops and liquidity. So what you have resting above here is that liquidity. Now, when I say that this looks all nice and smooth, and that's what my eye is drawn to, is because I know at some point that these relative equal highs are going to get absolutely smashed. And that's where you're on alert to look for a trade. So when we had that awful nuke on Friday on the Nasdaq, you'll see that when that happened, not only does price reach up and dig straight into all this liquidity that we mentioned, but can you see how rough and jagged this price action is? It's messy, it's horrible, but that is literally what attacking liquidity looks like on a chart, because it all of a sudden it just gets all jagged and messy, and that's that liquidity being eaten up before you expect to move in the opposite direction, which is exactly what happened. We came all the way down here. So that's just kind of one idea of sort of liquidity being attacked. Another way to think about it is sharks are drawn to smooth, still water. It's cheesy, I know, but it helps me remember it. You've got nice still water, nice smooth highs, and then this is where the sharks come in to feast. That liquidity gets grabbed, and that is what gives it the fuel to deliver a lower price. And then if you're looking at where you're thinking you're going to take profit, or where you can reasonably expect price to go, is you're looking for sell side liquidity. And where the sell side liquidity reside, it resides under old lows, old lows, old lows. I think this took out nearly, it did, the entire week of buy stops gone on Friday open. Was it open? No, it was PM sessions.
It was towards the end. It was pretty much mid-afternoon, mid to late afternoon, wasn't it?
Yeah, it was for us. And the other thing as well, like, I know I said I wasn't going to go into the whole time aspect of ICT on this, but if you actually look at around when these moves happen, you'll find that this exact candle here that attacked buy side, the sell side liquidity, was at 2:30, which is market open, and that's within a kind of the New York hill zone, so to speak, which is one of the things that ICT talks about. But I won't get into all of that here, but so yeah, that's kind of like one thing that I like to look at. Other things that I find useful that come from ICT is order blocks and breaker blocks.
Yeah.
So when I think about like order blocks, let's see if we can find one. So this is the 5-minute chart. I mean, we'll see if there's any on the higher time frames. There will be somewhere. I say that I'm probably looking at the wrong chart because gold has done nothing but go up.
Yeah, I was going to say
there is a lot of
chosen
untested liquidity to the downside.
You've chosen that. There's probably some on Bitcoin, isn't there?
Yeah, most definitely.
Yeah, because you've got one at Bitcoin, haven't you, at sort of 112-ish?
Yeah, I mean, to be fair, that's pretty much where we retested the other day. So, right. So, what is an order block? Well, it's another liquidity concept, and how it comes about usually is when I get my path. You have price in, let's say, an accumulation, because these are the ones that I like to target because these tend to be the higher probability order blocks. A price is accumulating, and as we all know, you eventually get a displacement or impulse out of the accumulation range. What tends to happen is somewhere down here, where that big move starts, the impulse, we call it, we trade backtest, but again, this is why I say a lot of these things are the same, because a backtest most of the time
different names
is that you're trading backtest on a smaller time frame, when on a higher time frame it's probably an order block. So these are all orders here that cause that big move out. So this is the kind of place where order blocks reside. So an example of what they look like here might look a bit cleaner on the 1 hour, just because it's. So if we go back to end of September on Bitcoin, price came down. This very messy price action is what we know as accumulation, because we're not making any new highs, we're not really making any new lows. But here, something interesting starts to happen here, because this row of green candles takes us, not only does it take us out of this range here, but it also breaks that high there. So we have a break of structure. So if you go back to the start of that move, what I look for is those last red candles before that move. And then what I'll do is I'll take them across. Now, we're going to ignore Friday's awful price action for this example, because nothing got played.
Nothing got respected.
No. Stuff down here did get respected, but we won't go into that. But what happened was, you get this these are the types of reactions that you get from good order blocks. You get the wick in and the wick out straight away, and then here we don't even come back into that order block, because we've tapped into it here. And I mean, you could still be in this trade today, but it gives you that kind of reaction, and that's what I use ICT concepts for. Is I just want a high probability sharp reaction. Like that's what I use the concepts for. Otherwise, we could pretty much ignore the order block, and we could say, yeah, all right, fair enough, this is a back test, and it is, and you would have got filled on Friday, but you'd have got stopped out straight away. But and for me, you could say that every single red candle before you have a green impulse, like here, you could say that these are order blocks. You could, but I'm not that interested in those kind of order blocks.
No.
These ones here, I'm not kind of interested in. Why am I not interested in these? I'm not interested in these ones because they haven't really led to a break of structure. Yes, we've gone on to make a new high, but I want to see this kind of thing here where they cause price to completely break an old high. And those are the ones that, for me, create the better reactions. They're in gold. I like them on the higher time frame gold charts. Like, I think they're really, really effective. If you can find one in recently,
Yeah, it's a bit difficult, isn't it, in gold?
because it just keeps going up and up and up. But certainly on the lower time frame ones, like on the lower time frame, you will find, like here, for example, just on the 5 minute, we've had this really nice impulse up here, and we've not only have we had the impulse, but we've broken structure from this high. So I'm interested in that, and we can see these last red candles. And I'm personally, I'm only interested in the candle bodies. Some people use the wicks. I don't care for the wicks. If I'm looking at order blocks on a high time frame, mainly, then I'm looking at just the bodies, and I'll map them out, and you'll see, again, you just get that reaction where it just feels. And again, it's all liquidity, because you also have a fair value gap here as well, so that's something that might add to your confluence. So yeah, that's pretty much the essence of an order block. And you can see as well that order block was respected an hour ago. And that's just on 5 minute. So in fact, that was a very nice trade.
That would have been I was going to say that would be a great order.
So yeah, I mean, it's that fair value gap's still not even closed yet. So some people might leave that on there.
Right. Yeah.
Which probably leads me on to another concept, which is a breaker block.
Yes.
Breaker blocks are something that I also like. There's not too many on gold, unless you look on like the lower time frame. Now, I think we actually had, here it is. I'll stick to the low time frame just because we have a recent example on gold from this week. So if you have, where is the right tool for this? There we go. Like, we have a trending market. Price is making lower lows and lower highs. And then what happens when price reverses? How do we know price reverses? Because we get that break of structure. So similar to what we talked about with order blocks. If we were looking at order blocks, we'd be looking down here because that's where you have the start of the impulse. However, there are other places you can spot liquidity within this structure. So what we have here at this high, we have people going short, and that gives us sell stops. Here we have people going short, and that gives us sell stops. Now, what is interesting with break blocks, I find, is when price reverses and it starts to come back up here, I'm on 5 minute, which is why my arrow won't be very straight, is you have all these people that went short here, they're going to start covering their position, whether that is closing it, moving stop losses, and flipping long. Some people reverse positions and they'll just flip long, because this as well within the retail world is, buy the breakout. So what happens here is not only do you have liquidity from people that went short, but now you've got people that are covering those positions to long. So you kind of get this imbalance, not imbalance, but you kind of get this double whammy of liquidity, if that makes sense.
Yeah.
Because price has broken through it, usually you'll see things like fair value gaps here because you've got that strong reaction when you've hit something like down here. You've probably have some kind of higher time frame support that you've tapped into, and that's what gives this big reaction here. So over here, you've got these people that are short and they've covered the position. So this generates a bit of liquidity there. And that's something I like to look for in a chart because, like, here is a good example. So if we look at this structure, we have this high, then we have this low, then we have the high doesn't really come until here, and then we have this lower low, and then we have another high. This, again, just basic market structure so far. What happens here with where this red candle is and where this low is, you've got people going long. So people are longing this piece of price action. But then when we get this displacement down, which creates this big fair value gap, people that are long from here, they need to cover that. They need to start covering. They need to change their position. They need to go short. They need to close it, whatever. So that creates that bit of liquidity in there, combined with the fact that you've got a fair value gap. So what I would be doing, I would take these last red candles here, and I would move them over to the right. I would keep it going to the right, keep going to the right. Boom. So this is a 5-minute time frame. So this is the time frame that I scalp on. So I don't look for anything more than 30 pips. But you can see here, that is what gave us. So you've had 130 pips reaction from there. So that is like, again, that's just a lower time frame example. If you've got this on a higher time frame, then you're golden. Like for me, breaker blocks on a high time frame are those kind of areas where you get that quick reaction and hopefully full profit straight away. That would be nice. But you can also see that liquidity exists there because price has had to slowly grind through that area because it's had to mitigate all the orders from back here. I think there was one on 4 hour. Whereabouts was it? It might have been like all the way back in July. I think it was July. Like when you get 4 hour breaker block. Yeah, so this is another this is a higher time frame breaker block here where you've got a high. We've then made a new low. So we got high, we've made a new low, we've made a lower high, but then before we've made a new low, price has just God candled straight up. And not only has it God candled straight through, we've had that nice break of structure, which is what makes it a high probability trade in my place. So again, all I'm going to do here is I'm going to take that last green candle before the drop. I'm going to draw it out to the right. And you can see there, you see that reaction that we get? So we wick in, we tap it, and before that candle closes, you've got 200 pips, 200 pip profit. So again, that's what I'm looking for, that as soon as that quick high probability reaction from liquidity. So is this making sense so far? I think his sound has gone, so we will continue to move on. So yeah, are you back? You sound back there, Wiz? No.
Right.
Oh, you there? I didn't skip where I'm going. So that's kind of stuff that I look for. It just adds a bit of confluence. Nice easy. Other things, mainly order blocks, fair value gaps, breaker blocks. And it's all stuff that can be found on YouTube. There's plenty of people that are teaching and reteaching all this kind of stuff. It's nothing new, it's nothing major, but that's just how I look to add it into my trading. Wiz has left me solo here, so I'm going to go to the chat and I'm going to hope that Justin is here. Thought you lived in a skip. Let's see if we can get George to crack on stream. You probably can. I mean, it doesn't really take a great deal. Can you hear me now, Wiz? Are you back?
I can, yeah. Sorry, I am having horrendous technical difficulties. I think looking through the chat, so one question we have from Ergi is, in which area of the order block is the entry when it's that wide? How would you approach that one?
For me, if it's a higher time frame order block, then I'm going for the highest point of the order block, because you need to spend some time in like replay mode to get confidence on the kind of reactions that you get from these. But for me, the higher time frame order block, I will just go with the closest point, and I'll set an order there, and I'll go. I make sure that my stop loss covers the order block, because the whole thing is liquidity. So, which is why if you're trading them on like a 5-minute time frame, it's not so bad, because they do tend to be quite small. And I think if we go back to like the Bitcoin example that we were talking about earlier, you can see here, you've got an order block which is pretty small. You've got an order block that starts at 109. Now you could easily have your stop loss below that order block, and you're still within the 109k range. So that to me is fine. It's low risk management, even if you include the wick. Wise men always give signals on a Tuesday. We're gonna get onto signals, mate. We'll get on signals. I think Wiz is giving out signals today. So I think that was from Ergi.
What else have we got?
Can you explain as well?
There is a demand for signals in the chat. George.
What time frame is it? Because it won't get sharp enough for me.
Sorry,
Hugo. I think that is because my screen is so fucking large. That's not really.
Can we analyze one from scratch and what you expect to happen? That would constitute a signal if we go signal hunting.
Jesus,
here we are. You've just seen a trade on the screen. If anyone screenshots it, they have just got a signal right there. If you press the screenshot button.
Oh, Jesus! I should have.
I believe the ticker was Ethereum.
Yeah, maybe it was. Now the thing is, since Friday, has the PA been amazing on crypto to find something? I would say not, because if you if you're looking in terms of like what the candles look like, then this is an order block here, right? Or it's a back test, whatever you want to call it. But for me, it's not broken structure. Like when price has gone up here, we've not broken anything. Like there's no highs, there's no nothing here. Like if we did like manage to build up here and take out here, which is a bit more of a significant high, then I would be saying, right, we might have a higher probability order block to play. But I think, oh Jesus, done it again. Looking at things like Solana again, I don't really like anything on crypto at the minute. If you're looking for short signals, then maybe you've got something, right? Because here, definitely you have something. So this one is just, give us a fake one. Here you go, Ergi. Here's a real one. Right. So what do we have on Solana? 4 hour. Accumulation pretty much, because it's in a range. So as I already said, it's important to understand market structure. What did I say when you come out of accumulation? said that you normally get that big impulse move out of the range, which we did here. And what did it leave behind? It left behind this green candle here. I'm also long, Mr. Justin, but I think we have the same entry. If not, I think I might front run you this time. So this here is a good example. Why is it a good example? Because that awful move that we had on Friday completely broke structure. It took out this low, it took out this low, it took out this low. So we have like not one, not two, like we broke structure like 3 times. And so I very much expect that on the 4 hour, this accumulation then hyphenation, I very much expect there's going to be some orders left over here. So here is a signal, Ergi. Also, if you're a backtest trader, and again, this is why I say a lot of it is the same shit, different toilet, because you would also look at this and you'd say there's a backtest there. We might go to the 15-minute chart and we might refine it a little bit and say, okay, well, it's backtest might be a little bit higher, but then when you come back to your 4 hour, you're still pretty much within that order block point. So that's around 220 on Solana. So you potentially might want to look for a short there. There's probably a bit of mitigation to do because we've got fair value gap here, fair value gap here, and as you can see, fair value gap here, which is why price is just grinding its way through it. So that again is just another way to look at it. It's easier to check in the past but confusing about future data. Well, there you go. There is a future one. You'll probably find one on ETH, like a lot of the stuff looking the same. Here you go. ETH. Scroll out there. Why do I like that one? Because it gave a move that broke structure to the downside. Broke this. So, and again, it's a back test, isn't it? You look up there, back test, boom. Yeah. There's a lot. If you look on some high volatility cryptos, there's a lot. I mean, I'm looking at Hyperliquid, for example, has loads of them. It's I think it's there's some interesting opportunities. If anyone took the screenshot then for the signal, you at least owe me a like on the stream. Give it a like. Give it a like, and if it doesn't pay off, then don't come after me. Come after George or at Web3 Jalapeno. I think so. The next concept I think on my head, and I know we spoke about it a little bit in the CSE thing yesterday, is that concept of turtle soup. Yeah, turtle soup. So it's already kind of, if I go back to the NAS chart from earlier, the whole point of, again, I can't really tell you about a higher time frame point of interest on this chart because it's in all-time highs. So, right, I'll tell you what. You probably, I think, let me see if I have one. Let me consult the trading diary because I know we have been having them, especially on gold. But basically, to draw a turtle soup out, it comes back to understanding market structure. So even though we're seeing a new uptrend, that doesn't matter. You can still short it. Yeah, so you can still get that reaction there. There's all kinds of things that you can do. If you feel like you're trading against a trend or whatever, then you might be someone who waits for confirmation. So if you've got a higher time frame point of interest, like a 4 hour or a daily or a weekly order block, once price hits there, rather than just going straight in, then you might want to go down to like a 15-minute time frame and wait for the change of character, which from speaking to you, Ergi, yesterday, you obviously know what change of character is. We're looking for that bearish market structure shift. That's one way if you want to play it safe. For me, my risk is always managed. So if I know I'm only going to lose 1%, I just don't I'll just put the order in and just go for it. Turtle soup, how does it differ from the power of 3? Turtle soup is the power of 3, mate. So, we talk about market structure, and again, this is like, it's not necessarily just an ICT thing, because market structure, as we all know, is market structure. It always will be. It doesn't change. And I don't think Mr. ICT can take credit for inventing market structure, because he definitely didn't.
He'd love to, though.
He probably would love to. Yeah. He would. So when I find my path, so there is, you've obviously got normal market structure, you've got accumulation, and then you've got even some kind of well, we'll use the power of 3. For example, in accumulation, as we mentioned earlier, you have relative equal highs here, also known as resistance. You have relative equal lows here, also known as support. So what do you have on either side? You have liquidity resting up here from the sell stops, and down here you have liquidity resting for the buy stops. What a turtle soup is, or a power 3, or whatever you want to call it.
Give it a new name. Come on, make up a new name.
Well, I want to call it, rather than turtle soup, I call it turtle soup. So everything's got to be poo related. It's basically, I mean, retail will probably think of this and see it as a fake out, or a bull trap or a bear trap. So as we mentioned, if the market wants to go higher or it wants to move lower, it needs to take something first. It needs fuel. So it needs something from the liquidity that's built up down here. You've got liquidity up here, liquidity down here. If price is to go higher and deliver higher prices, it needs to take liquidity from the downside, which, when you're looking at a chart, will literally translate to something like this, where we come down, we grab that liquidity, and then suddenly it blasts off. What normally happens, everybody who's long, they get wrecked, and then all of a sudden price goes to their full TP. So how can you trade this move? If we split this up into market structure, just dead quick, with some vertical lines, you have this is, let's say you've got, this is your accumulation, this is your manipulation, and then you have your displacement, distribution, whatever you want to call it. How can you trade this? If you have, and you can recognize relative equal highs and relative equal lows, and you recognize market structure, and you can see, right, we're accumulating right now. And what you can look for to, if you want to try and get in on this move down here, you're looking for a higher time frame point of interest. So that could be, this could be, and I'll make the text really big, this could be some kind of fair value gap. It could be an order block.
An order block.
Could be a breaker block. Anything higher time frame wise, it could even simply just be like a swing low or a swing high, because we all know that liquidity rests under highs and lows. So that is a high time frame point of interest. So I'd be looking for these on like 5 minute, maybe a 15-minute chart, but usually I'm scalping, so it's on Forex or gold, so it's a 5-minute chart for me. And then my higher time frames come from the 4-hour and above. And if you can recognize that, it will stop you from getting wrecked, and it will stop you from doing the whole kind of retail ideas. And it's not because people are doing anything wrong, because yeah, this is resistance, but it's also knowing that where resistance is not the same as liquidity, because liquidity rests below, and price is going to be drawn there. So that in itself is a turtle soup. I haven't traded one for a while, so I don't have off the top of my head any live examples, but you will probably find them even on a micro scale, on a 5-minute, they'll be like reoccurring. You could even say stuff like this potentially, where you've got relative equal highs here, pretty much. You've also got lows that aren't getting any lower, so that you could recognize that even though it's on a small time frame as accumulation. What do we have just here? We have a fair value gap. I know this isn't a higher time frame, but just to give a bit of an example, what happens? We smash through those lows, we tap that fair value gap, the price delivers higher. As a kind of mini example. But if you go online, you go through your charts, you'll find this stuff occurring all the time. So, yeah. Justin doesn't need me to answer his questions, so I know he's.
I was going to say he knows. Yeah, I mean, it's really interesting. I think building on that then in terms, so I think we've covered most of the key concepts. I think probably sort of a question then is how do you piece it all together? And then I guess if all of those align for you, what's the thing that makes you want to pull the trigger on it? Like that sort of confirmation that you've got all of those things lined up, and that's the A+ setup. What does that look like to you?
So for me, that looks like, this is where the time element comes back into it, because certain things happen in the market at certain times. So, for example, New York, the New York kill zone is what ICT calls it, but UK time, anytime from sort of like 1 o'clock in the afternoon onwards, so that hour before pre-market, allegedly that's the time that the algorithms get switched on. Now, whether you believe that or not, I don't know, but what I can say from going through the charts is things do happen within those times. So if we go back to like the NASDAQ example, for example, just as an example, right? What I tend to do, I go from like, if you're looking at like 7 a.m. New York time, is when the market tends to start moving in a way that it manipulates, if that makes sense. And it starts engineering liquidity, which again is like that 1 p.m. time at New York. Sorry, no, it's not. It's 1 p.m. It's 12 p.m. UK time, which is 7 a.m. US time. And if you look at, like, for example, like here, if I'll go back into the 5-minute chart, you'll see that certain highs get put in at certain times. So this high here, again, tinfoil hat or not, this high here was made at 7 o'clock in the morning UK time, which is like, this is like then Asia session high, so it's a time-based liquidity, and it also happens to be relatively equal high from half free, which is also made during Asia. So as we then come and open up and we come into London, again, this low is significant because it's London low. You've then got London high was here. And then what happens here is this move happens at 2:30 in the afternoon, which is New York open for us. So I think time is definitely a thing, but there's a lot more to it, and I don't really want to go down that rabbit hole, because it is a rabbit hole.
We'll save that for the next one.
But other really simple things that like a lot of people don't think of, like if we just take, what is this? This is GJ, right? If we just find a time when GJ was like trending or whatever, just for ease or simplicity, right? You have, this is the daily chart, and this is a really simple concept that not many people understand. Oh, not understand, but not a lot of people think about, right? If you just want to make a couple of trades a week and you make whatever percentage and that's your week done, you only need 1 or 2 trades potentially a week, and as long as you get daily, we all know daily candle is like you make me so smart. I'm about to blow your mind now, Justin. Something really simple. If you think about a daily candle, right? You have okay, let's draw a little daily candle out, right? You have this is a red candle, right? So it's a daily candle. What you have the open, high, low, close. Sounds stupid. Sounds so simple, doesn't it, right? All you need to do is capture the lion's share of the move for the day, right? In one day, maybe once a week, twice a week, and you've potentially made your money then. So what's really important is like, and a really simple idea is just be on the right side of the market, and no one can predict where price is exactly going to open and where the daily candle is going to close on the Nasdaq. No one can do it. If people could do it, they'd be incredibly rich. But if you can if you can figure out whether that daily candle is going to close higher or lower than the previous day's candle, then you've done like 50% of the work. And if you think about basic market structure, is when you're in an uptrend, candles are made. Let's say these are candle closes or wicks or whatever. You have a swing low. You made up of 3 candles, right? When I can draw them straight. Swing. Oh, Jesus.
There we are.
There we go.
Straight enough.
Swing high, right? Because you've got 3 candles. It's 3 candles. Where have they gone? Right, there we go. So you have, and this will all make sense in just a minute, right? An uptrend is made up of high highs and high lows, right? Now, when you have stick, how do we make? I'm not very good at presenting things, if you've noticed.
No, you're doing a good job, don't worry.
So made up of higher highs and high lows. Swing highs and swing lows. So what is a swing high and what is a swing low? You need 3 candles together that quite literally look like that. You've got a low on one, a lower low in the middle, and then a higher low on the right, which then makes this the swing low. Same with the high. You've got a high, higher high, and a lower high, which makes it swing high. And that's what an uptrend looks like, swing lows, higher highs, higher lows, higher highs. So if you look in a chart and you think, right, what very easy on about? Well, here we have, and this is where we're literally just concentrating on like 3 daily candles at a time, which can be a bit weird. It was weird for me when I started doing it. We have a low here, we have a lower low here, and then we have a high low here, right? So this is a swing low. Makes sense with me so far. We're then looking for a swing high, which you're then going to have, this PA is a bit messy, but eventually you have a high.
Probably there, isn't it?
Higher high, yeah, and a lower high. So you could say that this is a swing high. How do we know we're bullish? Because these candles are close. We're breaking daily swing highs. Again, sounds really obvious, sounds really simple, sounds really stupid. We're making new highs. So if I want to trade with a trend, right, and this requires patience, but a lot of people don't have patience. But if you look at the chart, please explain in Jamaican, right? Let's say you want to trade this GU, right? GJ. If this is what daily candle structure looks like, all you need to wait for is a swing low form. Once you've had those 3 swing lows form, then you can look and say, we've got a little swing low here, right? We've got low. Again, I'm going to really zoom in. We've got low, you got a lower low, and you got a high low. So this here is a swing low. 3 candles, that's a swing low. That means on day 4, this candle, I'm going to be a buyer, right? And what would have happened? You'd have been on the right side of the market. You've got easy targets because your targets will always be the previous daily high. That's going to be your draw on liquidity because that's where, as we said earlier, liquidity rests above all highs and all lows. So if you can say, and I'm going to go back to the benefit of hindsight and go to replay mode and say, right, 3 candles here, we've got a swing low. I'm going to be a buyer here, and I'm going to target previous day's high. Boom, you've done it. Like, you've done it. And then what you then do, you're in a bullish market on day 5. I'm going to be a buyer, and I'm going to target previous day high. You've done it. That's where price you've identified that you think that this next daily candle is going to be higher. I'm going to target previous daily high because I know where liquidity sits there. So that is 70% of the work done. All you need to do then is during the day, you need to find a place where you're going to get long. And that could be whether that's an order block. And there's a method that I use to do it. I'll look at, session high, session lows, previous day high, previous day lows. Yes, I do use fibs. Some people think are a meme. Yes, they are a meme.
I heard you use trend lines as well.
Don't swear at me. But if you're going to trade with a trend, right, you just keep marking out previous day's high. You're going to do this until you get what? Swing high. And then you've got the free candle pattern. I'm going to be a buyer on the next day. Price doesn't do it. Price doesn't break through. Does it there? Yes, it's a red candle. Did we trade through previous day's high? Yeah. But you've also had 2 targets to go for. You've had that daily high as well. So now we've had this red candle and we're coming down. We've also broken this candle's low. So you're just going to wait for the next swing low to get put in. If you don't manage to screw up your replay mode like I've just done. So that's just a really basic way of reading daily bias and just deciding if you're gonna long or short. And then you're just looking for a place to get in. And again, that comes back to what I would say about time and liquidity and things like that. Whether you use that whether you use fibs and I do use fibs. I use optimal trade entry, which is the percentage based thing that ICT does. And if you kind of take lows and highs like I have done here, the idea is you'll always get that 79% retracement, which I've got lucky here because it's played out on the thing. But and as long as you're using relevant highs and lows, why is this a relevant low? Well, this that's depending on what time your Asia session finishes and your how you trade, then that could be London low. It's going to be that's 8:30, so that's a London kill zone high. So that is important. You've then got buy side, and I'm just freeballing it here. You've got liquidity up here. So what you're going to look for, if you've already done your daily bias reading and you've said, right, I think this is going to be a green candle, I'm going to target previous day's high. Yeah, you've already taken out previous day's high by London, but that doesn't mean that you can't then get long on a retracement and not only then target today's high as well, but also back to yesterday's high, which
previous day's high.
Because you could say that this is going to be TP 1 or 2. And then this is going to be TP3, and if you look, that's pretty much exactly what happened. Yeah, it didn't come until the next Asia session, but it came. So yeah, I feel like I'm doing a lot of talking rubbish right now.
No, I think it's I think it's interesting. I think we're getting to the end. I think for those who are signal hunting in CS in certain discords, what is an anal pellet?
Oh, I can't. I can't give the anal pellet. All I'll say is it does come from an ICT. It stems from an ICT concept, but I have myself and other people have worked quite hard on developing something extra to it that I can't quite give away.
That is paywall. That is behind a not even a paywall. That is need to know basis. But it's quite interesting. I think I think then if we wrap up.
Yeah, sure.
Thank you very much, George.
No, it's a bit. It's everything. Everything I've talked about, you could spend.
Yeah.
Like I'm telling you now, ICT's videos are like 3.5, 4 hours long, and just talking about like one concept. So order blocks make up like hours worth. If you want to talk about them for hours, there's so many different. Everything that we've talked about can then be. You can make a variation of it, so then that becomes like 4 or 5 different order blocks and stuff. So you could talk forever on some of these things, but I hope that was a decent, like, basic crash course. And obviously, it's not my stuff. ICT is a person called the Inner Circle Trader. This all comes from his content. His content is on YouTube. He gets the credit. Just a quick disclaimer. I have not invented any of this stuff. I will not remodel it and rebrand it as though it's my own. Stuff.
No. Inner George circle.
Inner anal pellet.
No, it's really good. I definitely I want to have you on again to dive a little bit deeper into this.
Yeah.
I think if anyone's looking, so we had 2 streams yesterday actually. We had the 3 Wise Men. I recommend checking that out. We're pretty much bang on every week about it. We were bang on yesterday about the Bitcoin bottom. I also yesterday evening stream was quite interesting. A guy, William, who runs several deep in businesses. It was a bit of a different type of stream, but it was very good getting into sort of some of the technical deep in use cases. Tomorrow morning, I am excited and also quite scared. I have the craziest man in crypto on. He is a certified nut job, but he seems to find gems before they become big. I think he had MYX at 40 cents, CoAI below $1. Plenty of swearing, plenty of profanity. Bit of a crazy man. So catch me with Dr. Crypto tomorrow. And with that, I think I bid you all a lovely afternoon as we enter the kill zone. So if you want to try some of these techniques out, jump in. But as BlockPro will say, don't get wrecked. Thank you very much for watching, and I'll catch